Welcome back to Business Week here on Arise News. As the saying goes, when America sneezes, the world catches a cold. Well, this September, it feels like central banks everywhere are reaching for the thermometer. From the Fed's cautious rate cuts to Nigeria's bold hike and South Africa's surprise rate drop, it's clear that the global economic fever is still running high. From Washington to Joburg, central bankers are making some tough calls to strike a balance between taming inflation and keeping growth alive. Each of these moves are like the gears of a giant economic clock, each adjustment sending ripples through markets, currencies, and ultimately our wallets. Today, we look at how these policy shifts are set to impact everything from borrowing costs to exchange rates across emerging markets. We've got a familiar face with us today to walk us through, Mr. Tilewa Adebajo, CEO of the CFG Advisory. Before I put him on the hot seat, however, he has a brief roll call of some of these interest rate moves around the world. First, we had the US Fed Reserve reducing its policy rate by 50 basis points. The Eurozone, the European Central Bank cut rates again, following a similar path as the Fed. The Bank of England eased in August and maintained this stance in September. Canada cut its policy rate by 25 basis points. South Africa cut rates by 25 basis points, saying it continued to see a dip in inflation. China lowered rates as well and injected additional liquidity into the banking system. Japan kept rates unchanged. And of course, here in Nigeria, we went in the other direction. So that's the note we're going to start on. And I guess one of my first questions is there a pattern to all of this? You know, what does all this signal for the global economic outlook, Mr. Adebajo?
Well, I think from the US perspective, I think it's very important because everybody takes their lead from the Federal Reserve Bank.
Yeah.
And you know, the European central banks had already cut rates earlier than the Fed. And the Fed was being extremely cautious in terms of looking at its rate cuts. But if you take a look at the headline inflation in America over the last 10 years, you see that 2 years ago, interest rates in America almost hit a 10-year high of close to like 9%.
Yes, yes.
So it has taken the US Federal Reserve Bank 2 years plus
to get to this
drop
level.
Interest rates from 9% down to 2.5% today.
Yes.
And by accomplishing that, it gives the US Federal Reserve Bank the confidence to cut its rates.
Yeah.
Because now you feel that you've tamed inflation, now you want to cut rates to stimulate growth. And of course, that is a major ripple effect across the world. And what that means is the fact that borrowing costs in America comes down, exchange rates in America will devalue because people are looking for other areas where they can find higher rates of interest. But of course, you see how the financial markets in the States rallied on that rate cut.
Absolutely.
Because growth and stimulus. So it's a major stimulus, mortgages, everything is down. So basically, it's a stimulus for growth, and really that's the mechanism.
Yeah.
It's called orthodoxy.
Yeah, it's called orthodoxy. I also think sometimes I think it's a fine art because here we see the actual clear impact of monetary policy. In other markets, we don't see that translation effect. And then we also have governments who are so fearful of driving the economy to disinflation and stifling growth. So what is so different about the way the Americans do their rate cuts, where you actually see the effect steadily compared to some emerging and frontier markets?
Like Nigeria.
Well, yes. I mean, I didn't want to say that specifically. We're going to come to Nigeria. But yes, can you give us some insights?
You see, there's no magic to this. And, you know, when we talked about coming on today, and I said, look, what is the key points that we need to make today? The key point we need to make today is that the reason why we're here today in Nigeria is because we're self-inflicted. Now, let's take a look at the inflation numbers in Nigeria over the last 10 years. If we can get that number from your producers.
Yeah.
If you take a look at what the inflation has been in Nigeria over the last 10 years, it's a different graph from what you've seen in America.
2015, we were
yes,
6%, 7%.
Yes,
yeah.
That's what I'm saying. 10 years ago, inflation was in single digit in Nigeria.
Yeah.
And the economy was growing between 8.5 to 10.5, 11%. So it's not magic. So if you do not return to the areas of low interest rates, then you have a problem. So what happened in Nigeria? 2022, inflation, just 2021, 2022, inflation was still single digit. But between 2021 and 2022, something happened in Nigeria.
What happened?
Ways and means.
Okay.
If you take a look at the Ways and Means chart, maybe your producers can put it up. there's a correlation between, if you take a look at 2022 there, Ways and Means hit 22 trillion naira. And from that point in Nigeria, from like interest rates being at 11%, it was a slippery slope.
Yeah. In fact, you could almost superimpose this chart on the inflation chart.
Exactly.
So, and the curves move in the same direct correlation there.
Exactly.
So is it really liquidity and money supply in the economy?
Exactly.
Okay.
So the fundamentals you're talking about in America also works here. So this is what you're saying is the fact that what happened in the States was they were serious about bringing down inflation, and we were serious about increasing inflation through money supply. So if you saw what happened from 2022, then between that point in time, a point which the central bank governor made, you are seeing that your money supply has gone up from last year was about 65% increase in money supply. So money supply is now 100 trillion naira.
Okay.
So with that amount of liquidity in the system, you're not going to make any progress.
So help me understand this and help the layman understand this as well. If you have that amount of liquidity in the system, is the tool money supply and or the cash reserve ratio or whatever it is, which of those is most effective? Are you then saying that the only way we can absorb and pull back all that money from the system is raising rates, or do we need other types of governance or policy measures that will help curb the growth of money?
Yeah, you know that one of my favorite subjects is Ways and Means.
Yes.
Okay, and the reason why is because Ways and Means is illegal. When you do something that is illegal, it will impact on your economy negatively, and that is what has happened. So when we find ourselves in this situation, we only have one choice. Okay. That is to tighten, and that's why I'm firmly in support of the 50 basis point increase by the central bank, because that is to preempt. It's a preemptive strike to head off the cost of the increase in fuel prices. Okay. Because fuel price is a direct cost driver for cost push inflation. So that will impact within the next 1 week. We'll start to see the impact. You start to see the fact that the impact of transport prices are going to go up. So that was a preemptive strike to head off that inflation. So that was the right step in the right direction. But we need to go to the root cause of all this. Yeah. So the central bank can only do so much. Indeed. The biggest problem in Nigeria today is fiscal indiscipline. So the government really has to stop spending money the way they're spending money. This present administration went through 7 trillion naira in 5 months. We have a 21 trillion deficit that we're going to finance this year. And we have 3 budgets that are running concurrently. So there's a significant amount of fiscal indiscipline in Nigeria today. It doesn't help that the members of parliament or the House of Reps and the senators are not doing their check for oversight. You know, they're constantly increasing budgets. So if you continue along this rate, it's government spending that is driving this problem. The economy will not grow. Absolutely. So that is the dilemma we have. So now the central bank has done this. We need to take a look at our reform policies, which, as far as I'm concerned, have failed spectacularly. The reform programs and the palliatives that's what upsets me the most. You set up a ministry for palliatives, and the minister in charge goes into corruption within the first 3 months. So there are 2 things you need to do. Either you replace that minister, or you scrap the whole ministry and relook at your intervention program. You cannot go through this sort of reforms program without providing the necessary cushions to people, because we have 133 million Nigerians in multidimensional poverty. If you're going to do reform programs that are this difficult, then stomach infrastructure, as we call it, becomes paramount. Absolutely.
So help me understand this. You know, the rate hikes need to be there, but there's the issue of consumer credit and lending to SMEs. So and then we're trying to plug back liquidity. I see a bit of a dilemma there on the one hand, because now borrowing costs are going to increase because the MPR is a reference benchmark for borrowing across the banking system. So what exactly is the option here? Because you need to stimulate small business. You need to give consumers credit, but that means putting and injecting more money into the system. But on the one hand, you're also saying we need to absorb the excess liquidity in the system. Help me understand this.
2 sides here. What's the flip side of all this? Who's smiling today? Pension funds, savers, investors, people who invest their money, who are getting very good returns on their investments. Right. That's the flip side.
In fact, we expect to see capital flows as well because rates are going down. Yeah.
So people who are serious about investing, who invest their savings, are smiling all the way to the bank. So the question is the fact that you saw that chart of inflation in 2015. We had that balance of equilibrium,
yes,
where the rates, inflation, and everything was stabilized. So when you move into disequilibrium, as you can see with the charts you're seeing, in 2015, when inflation was low, there's also a direct correlation to GDP growth.
Absolutely.
So if you take a look at that chart and you plot our GDP growth, as inflation goes up, our GDP growth comes down. So the lower the inflation, the higher the growth. So there's an inverse correlation in that perspective. And that's where we need to get to. So now you're saying that small businesses, yes, it's a shame on that. But the fact is that for now, because this whole period, the essence is keep rates as the states. You know what happened in the States? We talked about it. It took them 2 years to bring down inflation.
Yes.
From 9% to 2.5%. That's the same thing we need to do. 18 months of focus, not only from the central bank, but also from the federal government of Nigeria.
So you're saying Nigerians should keep feeling the pain and the pinch of this?
That is why I said that the palliative and the intervention for this reform program
the other side of it.
Has not been implemented. And that is the irony.
Because that would then cushion the effect of this orthodoxy.
Yeah. Exactly. So, and then in Nigeria, demand pool is not a big stimulus of economic growth in Nigeria. Because why? Purchasing power is low. We have become, quote unquote, a sachet economy. So if you have a sachet economy whereby even alcohol is sold in sachets, you know, Gary is sold in sachets because people don't have the purchasing power because of inflation. So until you reduce inflation, you cannot put money in people's pockets or their hands to be able to stimulate that demand.
So what do you need to do? Investment? Is investment the other side of that if it's not
the most important thing that you need to do is you need to stop the source of the money supply.
Okay.
That is the government spending. Government has to stop spending. And it's not helping. Our defense budget is 2 trillion naira. Our debt service budget this year is 8 trillion. So our debt service budget is 4 times our defense budget. That is not going to work. It's unsustainable. So government really needs to press the reset button because, you know, we've gotten into a quagmire in terms of these economic reforms. And really, we need to press the reset button and plan something that is more sustainable because this clearly is not working. Yeah,
clearly. And, you know, interestingly, Nigeria's GDP figures for, I believe, Q2 actually showed a slight improvement. I think we had grown to about 3.19% for Q2 2024 compared with 2.98%. My worry is that with these rate hikes, central banks sometimes worry about stifling the economy with rate hikes. My concern, at least if I'm putting myself in the shoes of the consumer, is if the central bank perhaps sees that its monetary policy orthodoxy and rate hikes and tackling inflation is not impacting growth, then it would give it more confidence to continue to stay on that stream. So is there a correlation between the monetary policy mechanism and growth? It doesn't seem to be. Like GDP growth in Nigeria is actually relatively resilient. It's growing. In fact, it grew in the second quarter of this year.
Okay. What is the optimal growth rate for a country like Nigeria? That's the question you should ask.
Should really be double digits.
Exactly.
Yes.
So our growth is suboptimal.
Yes.
So what we're saying is that we're growing, but it's suboptimal. What is our population? What's the rate of growth of our population?
Probably close to 10%.
3%.
Oh, okay.
3% growth. So if your GDP is growing at the rate of your population, then it's a zero-sum game.
Yes.
So what we're saying is the fact that, yes, there's a trade-off. You can't have both. You can't have, like I said in the charts, you can't have the high inflation and high GDP growth. It's not going to work. The correlation is inverse. Okay, so inflation has to be low for GDP growth to be high. So you can't have both.
Both, yeah.
So you need to be able to drop inflation to have growth. So that's why, just as it's taking the states 2 years to drop their inflation, they've suffered that 2-year period. They've done their best, and now the rates have cut and the markets have rallied, and you can now begin to expect growth. Same thing we need to do. and which is why the central bank governor talks about the orthodoxy, following a clear path. But there's so much the central bank can do. The federal government of Nigeria really needs to come up with a proper economic reform program.
Are we going to see one this year?
Well, we're seeing that there's a cabinet reshuffle.
Okay.
I don't know what that means, but more than cabinet reshuffle, we need economic leadership. What is lacking in this country is economic leadership, because a lot of good people are working in silos, but right on the top, there's no leadership to coordinate the direction. And let me give you an example. Oil today is selling at $70 a barrel. Nigeria is only producing 1.3 million barrels a day. Imagine if Nigeria was producing 2 million barrels of oil a day. We wouldn't have this problem.
Yes.
So what is the government doing to boost oil production in Nigeria? That is where the effort should be. I've spoken to experts in the oil industry who've said that there is a program within 18 months where they can raise oil production to 900,000 barrels. And they've identified those specific oil fields. We're busy arguing about fuel importation and the price of Dangote refinery when PMS prices are set by Platts prices benchmark on the international
global
markets.
prices, yes.
So what are you arguing about? It's just like arguing about oil prices. So the government, as I've said earlier, should go and sell down its JV assets. In the process of selling down their JV assets, they can raise $50 billion. Then all those operators can go and make the necessary investment to boost oil production. If we're selling oil and we have the foreign exchange, Nigerian economy will change overnight.
Absolutely.
It's a no-brainer, but we're not focused in the right direction. Sell down your JV assets, you raise the $50 billion, pay down the debts, then go and get some serious fiscal management and then boost the economy. We've not even talked about exploiting our gas resources.
Indeed. And perhaps the cabinet reshuffle at this stage, because it does seem like we're short on ideas to really help set this economy on the right path again. We saw that huge momentum of reform last year, and then we've seen a bit of a slowdown. So clearly there's need for a bit of a shakeup. But looking at the oil sector, this focus, sometimes I question this undue focus on boosting production. Do you see it is it because that's all we have now, really? Because everybody talks about the fact that Nigeria's kind of solution in the short to medium term now is to focus on oil, get it at full capacity, 2 million barrels, and that will at least keep us stable economically for the next 2 to 3 years. What about the longer term beyond that?
Good question. Longer term beyond that now becomes, because you've put yourself into a situation whereby you're dealing with small, little problems. You're not focusing on the big picture, which is what Nigeria's problem is. We have vast amount of solid minerals in this country, coal, lithium, and all these gold we've not been able to exploit commercially. Most of the miners in this country are artisanal. You don't have the big mining companies in Nigeria. So the Chinese are here, they're more exploitative and opportunistic. So you need that corporate structure around the solid minerals. Agriculture is a sector that we also need to focus on, which is something that is boosting us. Our manufacturing sector is suffering. If you take a look at the GDP growth of the manufacturing sector, it's less than 2%.
And I think those borrowing costs are going to impact manufacturing even more now.
Exactly. And that is why we're saying that when you're going through this reform process, it's very important. But unfortunately, this government put the cart before the horse. And that is why we're in this economic quagmire. And we need to seriously press the reset button, because this is not something that the central bank is going to handle alone.
Absolutely.
And the government really needs to reset, because if you ask me what the direction of government policy is today, I don't know what it is.
Yeah, interesting. We started this conversation talking about rates globally, and I don't want us to focus on the fact that Nigeria is a player in a global context. There's quite a lot of divergence around the rate hikes, rate changes. I can't even read a pattern, and I'm confused now as to what the global economic structure is. Given all these myriad rate changes, are we seeing an increasing divergence between advanced economies and emerging frontier or developing economies? You would have heard, maybe at the top of my show, where I talked about Turkey being able to go to international bond markets and raise at 8.2 just 200 basis points, above 10-year U.S. Treasuries. And I'm like, that's fantastic, right? So is there a pattern or divergence with all these rate hikes? And what does this mean for Nigeria in the global space?
Well, Nigeria is not immune from the global market space. In fact, we are a major player in the global market space because we not only participate in international trade, but we're one of the biggest, at least we used to be the largest economy in Africa. We're now number 4. And unfortunately, our marketplace, which is like 200 million people,
right,
is fast becoming a liability instead of an asset. So, but people look at Nigeria as a very important player in the global markets. As you see with the divergence of rates, like I said, everybody focuses on those shifts. Most of what was driving inflation was post-COVID.
Indeed.
When the central banks did not raise rates on time. They were caught napping.
And inflation just ran away.
Ran away. And so we're just recovering from that after about 10, 15 years of stable economic growth and rates. So you need to read into that because even China is the biggest investor in the U.S. Treasury bills markets.
Of course.
And China has its own strategy. So every country has to focus on your global strategy. What is China's strategy? We're a big exporter, and we need to make sure that our exchange rates are competitive against the US dollars and the euros. So the Chinese always make sure that no matter what it is, their exchange rates are always lower than that of the US dollars.
Yeah.
And they need to manage that because they want to make their exports cheaper for Americans and Europeans, because those are their big markets, to be able to boost their economic and their exports. And in exchange, a lot of their reserves, they invest it in US Treasury bills. So China has its strategy figured out. So everybody in the global markets has his own strategy figured out based on their competitive advantage.
Indeed.
A country like Japan does not have any resources. It doesn't have any oil. It doesn't have any of those natural resources. It has to import a significant. So when we talk about Nigeria being an import-dependent economy, there's nothing wrong with being an import-dependent economy. Japan doesn't have oil. It doesn't have the iron ore and all the resources to feed its manufacturing sector.
So what it does have is a great investment environment.
Exactly. So you create that strategic advantage and you create it's like what is your competitive advantage?
Indeed.
So you work on your competitive advantage and you work to your strengths. So if you take a look at the Japanese, they're signing 30-year contracts for gas, 30-year contracts for oil, 30-year contracts for iron ore.
Those things should be Nigeria's competitive advantage.
Exactly.
We should be tapping into those long-term, securing our future, essentially.
Exactly. So you do a deal with Japan and say, Japan, we know you need gas.
For the next 30 years.
So we'll sign a 30-year contract with you, build another LNG plant in Nigeria to exploit our gas. But we do not have that discipline to focus on those long-term deals. We have 3 LNG projects in this country. Only one of them is working. LNG, the current Nigerian LNG is working on train 7. And currently that LNG facility has only 50% gas. And Nigeria has extensive gas resources.
Absolutely.
So if you take a look at exploiting your gas alone, we can turn this economy around. So when you talk about what are we focusing on, and gas is a green, renewable, sustainable form of energy. So why should Nigerians be suffering when we have all the resources that we need?
It's so funny. Each time I read news on Qatar signing the 25-year LNG contract with this person in another country, and I'm thinking, have we been left behind? Here is an opportunity that we really need to tap into.
Sorry, before I forget, there are 2 other projects, Olokola LNG and Brass LNG.
Of course.
Those ones are still on the drawing board.
Indeed. And that would open up a whole nother vista of conversation. Mr. Tilewa Adebajo, CEO of CFG Advisory, always really great to have you for such an insightful discussion. I really sometimes hope that the right people are listening to these conversations and taking some of these ideas up for execution. Thank you so much for joining us on the show.
Thank you for having me and continue doing a very good job.
Thank you, sir. I appreciate it. Well, that's all we have time for on Business Week. I'm Rolake Akikube-Fulani. Let's continue this very pertinent conversation on X. Do have a lovely rest of the weekend. See you soon.